Stocks are in sell-off mode. The Dow's down about 777 points right now. S&P and NASDAQ also on track for their worst performance now since January and just continuing a very long losing streak.
Stock markets around the world are witnessing capital outflows as central banks hike lending rates on the back of skyrocketing food and crude oil prices. How should investors prepare to survive and maybe later thrive amidst this turmoil?
The crypto market is entering a winter, and whether prices will halt at the current levels or decline further.
Prices rising, inflation, is evil for our savings because the dollar in your bank account is worth less in a year's time. It's currently worth 8% less.
This week, Bitcoin, the world's largest cryptocurrency, fell by more than 6% to a 24 all-time high, while Ethereum, the second largest cryptocurrency, fell by more than 12%. The sell-off was triggered by the CPI report, which has created a wave of fear in the market. Other major cryptocurrencies also saw significant losses, with Cardano and Solana both down 14% in the same period. So, in today's video, I'm going to cover the cryptocurrency bear market and what you should do in these conditions. So stay tuned to the video as Raoul Pal shares his knowledge and experience on the cryptocurrency market, especially the one we're in right now. Also, if you're new to my channel, be sure to subscribe. Now, let's dive into the video and see what he suggests.
Income rules the world. Income pays your bills. Income can pay your mortgage. Income does everything. Without income, you got nothing. Income takes hard work. It's hard to get up the ladder, earn more income. Secondly, is you need to have optionality. You need to have things that can pay off. A startup or a hobby business on the side can give you optionality because you can build a business, and a business has intrinsic value, plus it can increase your income. That will never happen if you work for a corporation. Yes, you can have a great career and do fine, but you'll never have that extra upside that you and I have had by building businesses. So that is another thing, is focus on your income, work hard, look for other opportunities that can leverage that income and opportunity set that you've got for you. And then thirdly is, if I've got this income, look for investment opportunities that can change my life. And that doesn't mean being a degenerate gambler. It's like, simply put, if there is a thesis, for example, in cryptocurrency that you and I share, that this is a long-term network adoption of this incredible technology that is exponential in nature and highly volatile, you should be looking at the moments of extreme weakness, the blood on the streets moment, to be buying more, not on leverage, but just putting your money into it. So if you'd have bought a house after the 2008 crisis, you'd have done very well. If you'd have bought it at the peak, you'll have done less well, right? So timing matters.
Raoul Pal suggests that everyone should also focus on some side business, like some hobby business, and should make investments, so you can be sure of some extra return, an extra income. He believes in times like this, when there's extreme weakness, when we are in a bear market, it's the best time to add on your investments. Before going ahead, be sure to like and share. Also, let me know what you believe is the best time to buy the crypto assets in the comments below.
I went back with a bit of honesty, thinking, I'm looking at my ETH price and I'm going, why didn't I sell it at 3,000? I should have just, I could have bought it back cheaper. And I know that that is a siren song that goes in your head, right? Mental torture. And I've been in this space since 2013. So I went back and looked at my entries and exits and what I did in the past. And what had happened if I just bought and hold? And what had happened if I bought and hold and added when it was this far oversold? It's very simple. So I figured out that if so what I did is I bought in 2013, $200 per Bitcoin. It went up to, whoa. It went up to 1,000. Sorry, it went up to 1,000 in 6 weeks. I was like, oh my God. But I had a long-term thesis. I wrote the first kind of macro strategy paper about the valuation of Bitcoin. I thought this could be worth $1 million. And let's assume I'm an idiot by 90%. It's still worth 100 grand. So this is the best bet I've ever seen. So I held on, and then it fell 82%. And I'm like, wow. But I'd taken the bet and I put money in, was not levered, and I could afford to take the bet. So I just thought, I'm just going to forget about this and just see, because this is a longer term thing. And you don't normally make money that fast and doesn't normally fall this fast. So let's just see. And then I kind of forgot about it, 2014. And then 2015 starts going up again. And then by 2017, I'm now mentally scarred from an 82% drop, coulda, woulda, shoulda. I then see confusion in the market about either we're going to fork Bitcoin to two different chains. The price is 2,000. I'm now up tenfold. I'm a genius. My macro bet has paid off, sort of. I sell out. It goes up to 20,000 in 3 months later, and I don't mind. I don't mind because I've made 10 times my money. What I did was deviate from my thesis. My thesis was this was a 10-year bet. And I took the money off the table within 5. And then I went back, and then obviously I bought back in June, May, something like that, 2020, and had a good run and put more money into it than I had originally in my original bet. And I worked out that I had, as opposed to just holding my original bet, I used a theoretical number. So I think it was, if you put 10 grand into that first bet, it would have been worth 1.4 million.
Whoa.
By doing the right thing, buying reasonably low and selling reasonably high and, timing the market, that was a small fraction. It was, in fact, I think I made 20% of what I would have meant if I held on. And then I went back and looked at, okay, well, what did I actually do? Because I massively increased my position in June. I still underperformed by 5x. And then I went, okay, what happens if I'd done the right thing? What I should have done, which was my framework, which was you buy it when it's on sale, when there's blood in the streets.
With the Fed delivering its June monetary policy decision soon, everyone is sitting in fear. But he suggests holding and buying when there's blood in the streets. No, it doesn't mean you have to buy when there's a serial killer on the loose, like in some horror genre movie. But what he meant by this is that it is still a great time amid this bear market to invest in Bitcoin and Ethereum. You can already see that Raoul Pal has a lot of experience with markets, and not just with the profits. I mean, only if he had stuck with his 10-year time frame and not sold off earlier, he would have owned Bitcoin, worth millions of dollars. Now he regrets that too. But you don't have to. Now, to conclude, Raoul Pal shares 3 of his key points. First, timing the market is crucial. Buy in low and sell in high. Secondly, don't panic. Stay calm and rational. Lastly, hold on to your coins and think long-term. That's it for today's video. I'll come again with another amazing video soon. To always stay updated with my latest videos on the latest market updates, be sure to hit the bell icon. And also, don't forget to subscribe, like, and share. I'll see you in my next video.